is Stephen Miran, Council of Economic Advisors Chair. Chair Miran, it's great to have you on the show. Welcome.
Thanks so much for having me. It's good to see you.
So let's start right there with trade. When can we potentially expect to start hearing about some of these trade deals that are being negotiated and being struck right now? And how much hinges on, I guess, a similarity between these deals in different countries?
Yeah, so I hope soon. You know, I will say that the negotiations have been moving really well. We've got lots of countries that want to come and deal with the United States. The United States is the biggest and deepest consumer market in the world, and everyone wants access to it. And so that's why we've had over 130 countries come and say, hey, we want to talk to you, we want to negotiate. And, you know, large number of written offers as well, and those are all proceeding. And, you know, hopefully we'll start hearing about deals that are done in coming days to weeks, yeah.
Meantime, auto tariffs, whittling back some aspects of those tariffs. Why? Why now?
Well, I think it's important to give the economy breathing space to adapt to the new world. President Trump has taken historic action in terms of speed and scope with which he's acted to put American workers and firms on fairer ground vis-a-vis our trading partners, vis-a-vis the rest of the world. And I think it's important that we do so in a way that allows the economy to transition as we seek to make trade fairer.
Stephen, what's the impact if China continues to hold back these rare earths, magnets that are so important to aerospace and so many other critical electronics? I mean, the Treasury Secretary said in recent days that China tariffs at these levels are unsustainable, and it certainly is a large economic force in the world. What happens in the U.S. economy if particularly this rare earth impasse continues?
Yeah, so I don't see those materials being cut off from the economy for an extended period of time. You know, and Secretary Besson is completely right when he says the current rates are and the current arrangement is unsustainable. Therefore, you know, I do expect that we will have a move towards a form of de-escalation, and I expect that it'll come sometime in the near future. You know, at the end of the day, what we want to do is we want to provide breathing space for economies of the world to adjust to the fact that President Trump is putting American workers and American firms for the first time after decades of neglect.
Well, at the moment, in recent days, the U.S. and China can't seem to agree with whether talks are officially happening or not. So what gives you confidence that this won't last long?
So all that back and forth about talks and this and talks and that, that's all politics and that's all headlines. But I think at the end of the day, it's in the interest of the economy in the United States, the economy in China, and the global economy that there be some form of attempt to give breathing space to move past an impediment like the one you mentioned before with rare earths.
We've had a wild month for the markets. And it's pretty incredible to see the S&P less than 1% from the flat line here for the month of April. It's been quite the comeback story, but we've seen it across a number of asset classes, this volatility this month. Commerce Secretary Lutnick told our Brian Sullivan earlier that President Trump is not focused on markets. He was very focused on markets in the first administration, in his first term. Why not so much now?
So it's even better than you said. Not only is the S&P 500 back up to within spitting distance, but the NASDAQ is now up on the month, isn't it? And I think that's an historic testament to the president's policies. And I mean, look, you know, the policy change the president enacted earlier this month was truly historic. And so the fact that there was financial market volatility accompanying that shouldn't be a surprise to anyone. But financial markets are ultimately forward-looking, and this administration, President Trump's policies, are focused on making this the best economy in history and creating the best economy in the world. And we're doing that not only through trade policy, but also through further tax relief for American workers, further tax relief for American firms, and an aggressive deregulatory agenda to make the United States the best place in the world to do business. We want everyone to think that the United States is obviously the place to expand business, to invest, to create a factory, to create a new facility, and to hire and create jobs. And the financial markets are starting to look forward to that because we are focused on creating the best economy in history, the healthiest economy in history, and capital will ultimately flow to those investment opportunities, which are a function of economic growth.
I'm old enough to remember when a number of economists lining up with the president seemed to be saying that tariff costs would not be passed through to consumers. Yet today there was a bit of a question dust-up on whether this proposal internally at Amazon to show how price increases factored in, that was controversial, it seemed, the potential of it with the White House. Can you square that for me? Do you expect higher prices over an extended period of time for consumers as a part of this? And is there an issue, a problem with consumers being able to see why those prices are higher?
Yeah, sure. So, no, we don't see higher consumer prices over an extended period of time at all. Let's be very clear. The United States has all the leverage because we're the biggest importer, and we have all the options because we can change where we import from. We can import from other countries. We can import from ourselves. We can make stuff here at home, and we can shift our import patterns from countries that treat us horribly to countries that treat us a lot better and that make trade deals with the United States. That leverage and that flexibility means that other countries will absorb the cost of the tariffs in order to retain access to our markets, because access to our market is the truly unique commodity. So in the fullness of time, other countries will bear the burden of these tariffs. However, in the short run, as you've seen in financial markets, there can be volatility. And that volatility is a result of the historic speed with which President Trump has moved to place American workers first for the first time in decades. Now, that historic speed also creates volatility in financial markets, and it also opens the scope for some volatility in the real economy as well, and in prices. But that will be fleeting. In the fullness of time, other countries will bear the burden of the tariffs because we have the leverage, because we have the flexibility to change our import patterns.
Stephen, you've done a lot of work and a lot of research on the intersection of trade and national security. You've also done a lot on the dollar. What do you make of the move we have seen these last several weeks in the dollar? And should we be thinking about a national security aspect to U.S. financial assets, whether it is the dollar or whether it is treasuries, given the fact there are a lot of foreign investors in these asset classes?
Sure. So a couple things there. First of all, for thinking of the dollar, you really should go to the Treasury Department, not me. But that said, I'll say financial market volatility, as I said before, is totally normal. But over the long run, capital will follow investment opportunities, and investment opportunities are a function of economic growth. And we are focused 100% on creating the best economic growth this country has ever seen, and the investment opportunities will come along with that, and capital will flow there. And so despite the short-term volatility that we're experiencing as a result of the historic change in policy, in the fullness of time, capital will flow to where the opportunity is, and we're creating those opportunities. Now, you mentioned another point, which is the intersection of finance and the global and national security. And I think it's critical to observe that part of dollar dominance is the fact that it helps underline national security, because in order to really keep ourselves safe, we need a financial system that is beyond reproach and that will be able to provide the market depth for financing our national security needs and the national security needs that we need to protect our trade flows and trade flows of our trading partners. So the two are intertwined and always will be.